morning and welcome to this edition of Buy Now Sell on ET Now. I'm Cheryl D'Souza along with Varun Hirimath. And Varun, today looks like a pretty weak day for our markets. We've got a weak handover coming in from the US markets. Also, you have gold that is declining. It's at a 7-month low. You have crude that is falling in trade. And if you look at our Indian benchmark indices as well, they both are declining. SENSEX as well as Nifty are in the red. They did pair those opening gains and turn positive for a wee bit, but now again they're back down, declining. If you look at the benchmark indices, if you look at the broader markets rather, it's a mixed cues coming in from the broader markets. You have mid-cap index that is down in trade. Meanwhile, small-cap index is holding on to gains. Talking about the sectoral indices, you have auto sector that is declining the most, is down over 1%, including even you have a metal index that's down over 1% as well. IT, pharma, all of them declining in trade. The one that is holding on and in the green territory is the Psu Bank Index. That is the one that is holding on to gains. Remember, the PSU banks, these things stellar gains over the last few days, and I'll touch upon that a bit shortly. But let's look at which are the other stocks that are actually moving on the benchmark. If you look at the benchmark indices, you have UPL, GAIL, ICICI Bank. They are the ones that are holding on to gains. But if you look at the negative sides, a lot of them are declining in trade. So you have Tata Steel, Power Grid, Bajaj Auto, ICICI Bank, Tata Motors. Most of the motors pack, like I said, is the top sectoral loser as well. They all are in the red territory. But like I mentioned about the PSU Bank, stellar gains coming in. Remember, the finance minister in the budget had said that they are going to look to privatize 2 PSU banks. The names are doing rounds. Even ET now reported on February 2nd the names of likely candidates for the PSU Bank privatization. So on back of those news flows, you have big moves coming in on the PSU Bank. So on the week-to-date move, if you look at it, you have Central Bank that has moved about 71% this week. Indian Overseas Bank up 69%. You have Bank of Maharashtra that's up 59%. Bank of India up 58%. Bank of Baroda up 22%. Union Bank of India up 27%. Also, you have Indian Bank, UCO Bank as well as PNB that are also posted really a strong set of gains this week alone. So you can see what the PSU banks are doing, and definitely those counters, Varun, are actually garnering a lot of attention on back of the news flows as well. But what's on the BNSN cloud this morning?
Right, Cheryl. Thanks for that. Quite a clear trend visible. Metal stocks, IT stocks under pressure today for sure. And like she just flagged off, the PSU banks were the last stocks to re-rate. They have a lot of catch-up to do. They're still nowhere close to their private peers. So, of course, we're seeing a lot of the market momentum shift there for now. And then you have the likes of an ICICI Bank also that's kind of holding out post that warrant conversion. But coming to the BNSN cloud, as Cheryl was just flagging off, PNB and PNB Housing, 2 stocks leading the cloud this morning because there's divestment, and it seems that PNB Housing might be up for further sale to PE players, and of course that money will go to PNB, and but it'll also bring some professional management into PNB Housing. So those 2 stocks in focus. We then have a DLF also making its way into the cloud this morning. We have a NMDC on the back of Doni Malai Mines operations commencement once again. Ambuja Cement on some really good numbers. RIL on further development in the oil to chemicals hive off. Fortis on the stake sale, IHH. And then IDFC First, which is looking to raise around 3,000 crores in the near term to propel future growth ambitions as well as manage stress. So that was the BNSN stock cloud for this morning. Of course, we have Airtel as well. Let me not forget that, post the latest TRAI data. So that's where we stand with respect to the cloud. All those stocks should be fairly buoyant in trade throughout the day, so keep your eyes on those counters. But I think it's now time to talk technicals and fundamentals, which is the core of our show. Kunal Bothra and Vijay Chopra are both with us. Good morning, gents. Great to have you on board as always, and looking forward to hearing your thoughts on the market this morning, and also, of course, your calls for our viewers. So, Kunal, let's begin with you. What's on your radar today?
Good morning, Varun. Yes, I believe that the market texture is a bit subdued. Indices are going through a consolidation, so I think it's the best time for stock pickers because then mid cap and small cap and they tend to outperform. So I think I would be a bit iffy on the indices and would expect that the Nifty and the Bank Nifty could go through a bit of a range-bound action. There are a lot of supports for the indices as well on one hand, but then on the other hand, there has been a huge amount of call writing which has been spotted in last 2-3 days. So this incremental level of call writing which happens tends to make generate a new ceiling or a resistance for the indices, and which is why I believe every minor rally on the upside could be faced with a lot of resistance for the index. Now, in that backdrop, expecting mid caps to do pretty well, I'll go with two buy calls. First one, which I'm suggesting, is about BHEL. Now, even though the stock is having a bit of an off day today, but I believe after yesterday's renewed momentum, the stock surging almost 9% or 10% at one point of the time yesterday, I think it seems to be a stock which is found its momentum back again. So I think BHEL could be an interesting stock from a near-term view, and I think even at current levels, in fact, the risk reward is also fairly attractive for the stock price. So would suggest a buy in BHEL for a target of approximately 50. Stop loss could be kept at approximately 39 levels. The second one which I'm suggesting is a buy on Schneider Electric. Again, it's a mid-cap name, but the stock coming back towards making a fresh swing high for itself, breaking about that 110, 111 mark, which has been a more of a resistance zone for the stock. So very liquid name and a stock which has been trending pretty well. A buy on Schneider for an immediate target of closer to 125, and stop loss could be kept at 104.
All right, those are the high risk and the low risk ideas coming in from Kunal this morning. For the low risk, he has buy on BHEL, and for the high risk, he has buy on Schneider Electric. All right, Vijay, good morning. Cheryl also joining in. What are your high risk and low risk ideas for our viewers this morning?
Good morning, and I completely concur with what my friend said, that markets are going through some kind of a consolidation, which are good, which is going to be healthy. I think that some kind of a correction would make markets more appealing, especially for those who are sitting on the sidelines with cash and they want to invest afresh. But there are great opportunities even in these times, and there are a lot of mid caps and quality, large caps which are available. So my low risk idea for today is ITC. We have seen a correction in ITC post the result, and I think that this stock can go up to 240. This is a low risk idea, and this is a portfolio stock. If somebody wants to buy and hold for a long time, I think ITC can even cross 380, 400. So even it can double up from here if somebody holds with a longer term perspective. So I'm fairly bullish on ITC, especially with the demerger news which is making rounds. My medium risk idea would be Biocon. Again, we've seen a correction in this counter, and due to the exit of a very senior official, we saw a correction in the company. I think that this stock can go up to 450 and then 500. So this would be my medium risk idea. And finally, I think that Raymond has broken out after a long time. It has shown a lot of consolidation at lower levels, and this stock can go up to 410. This is a high risk idea, and you should keep a stop loss in this entire scheme of things. So I would say that Raymond can reach 410, 420. So these are my ideas for short to medium term.
All right, and those are the high risk and low risk ideas coming in from Vijay as well for this morning for our viewers. All right, hang in there, gentlemen, as well as Varun. We'll take a short break on this edition of Buy Now Sell Now, but stay tuned. Once we come back, we'll be back with the viewer queries. Don't go anywhere.
Hello, welcome back to Buy Now Sell Now. You're still watching ET Now. Let's get on with the queries section of our show, and Kunal and Vijay are still with us. First query revolves around banking stocks, and someone's invested in IOB, and they'd like to know the prospects here and whether they should switch to an HDFC Bank and an SBI or not. So Kunal, coming to you first, if one is to switch out of IOB, would you prefer HDFC Bank or SBI at the current valuations? And of course, what's the outlook for IOB?
So, I think many of these PSU banking stocks, and especially the ones like IOB, Bank of India and Central Bank, etc., they're of course been moving up, in last, 15, 20 days. And I think especially post-budget because of that, the theme and the news flow which came across. But the only question is that whether there is a trend in the making in these stocks and whether they could probably cover up their huge underperformance. And I'm talking of almost 8 to 10 years of downtrend into these names. So, IOB at one point was almost at 180 rupees to, I think, 200 odd rupees. I think if I'm not wrong, almost 10 years back. And the stock at one point in, March 2020 had come down to almost single digits of 6 rupees. So it's a recovery process which the stock is showing. But then I think if stocks like IOB etc. could do pretty well, then there is a much more higher likelihood that stocks like SBI from the same PSU basket, they could outperform quite strongly. So I think both the stocks, as an alternative, HDFC Bank of course looks extremely strong, robust. It's a completely different kind of a stock compared to the other PSU names. But I think SBI is also looking quite encouraging to me on charts as well. So, and given the fact that SBI has already confirmed that 10-year breakout is a fresh candidate. So, if I have to suggest, I would probably give more, technical importance or technical weightage towards a stock like SBI, because the stock has recently given out a 10 years of a trend line breakout. I think the chance of making a much higher exponential returns on a stock like SBI stands to be far more higher as compared to the other large cap names. But both these names are extremely solid. I would still give more weightage towards SBI.
All right, that is a call coming in from Kunal on SBI, HDFC Bank, and as well as IOB. Vijay, what's your take on IOB? Do you concur with the view of Kunal that the recent up move is only news-based, and also there's huge underperformance coming in IOB over the course of the years, and also our viewer wants to know that should he transfer to SBI or HDFC Bank?
So let me tell you through your channel that what is the reason why do we buy a bank, and what are the prospects. If you look at, I'm sure that look at the 10-15 quarters of IOB's results, it has been constantly posting NPAs. And not even for one quarter it has been in green or black, and we have seen deep red, and the asset quality is atrocious, if I can use this word. So if some bank has given a flash in the pan, I don't see a reason why to hold it. If somebody has bought it, very good, you're getting profits, get it off from the table and get into some fundamental story. So I'm pretty much okay with a Bank of Baroda or a Union Bank, or SBI seemingly is very good and strong on the charts, but again, wait for correction in the market and then get into the stock. So for no point I would say that you should stay in a stock like IOB or a central bank. People must have made money. Some people must have made, and some people must have burnt their fingers. But I would not recommend these banks to be in a portfolio. Fundamentally, these are very weak, and there is no reason, and these are just news based, so we really don't know whether it's happening or not until it actually happens. So there are a lot of ifs and buts to it. So IOB, definitely clean exit right now, book your profits and wait for a correction in the market. If we see some downtrend in any of these good large banking stocks, so I would recommend if you can switch there.
That's a call coming in from Vijay on IOB, saying that you should actually look to exit if you're book your profits rather, and also look for a correction and look at stronger PSU banks or the other banking names. All right, let's move on to our next query, and we've got a query coming in from Adi Narayana M, and he's saying that he wants to know whether he can buy a Balakrishna Industry at current market price. Kunal, first I come to you on Balakrishna Industries. How are the charts looking for this particular counter over the last 5 days? If you see that it's fallen about 6% in trade, but currently are the charts looking attractive for our viewer to look at it?
I think it's been a good stock. It's done pretty well. It has a very good history in terms of price trends, and also I think the stock has this history of going into strong uptrends and then providing those odd phases of corrections. Now, if you look at Balakrishna Industries on the charts, and even if you look at the last 2 weeks of performance and give rather more weightage towards a near-term trend, then the stock is going through a corrective phase. So from I think 1900 levels or 1875, which was the previous high for Balakrishna Industries, I think from there the stock has corrected almost 300 rupees. Typically, we see a 20% to 25% correction in a stock which is very strong in terms of trending natures, and I think those are the corrective zones where there is either support which or new set of supports which the stock seems to get developed, or either it goes into a mean reversion process, and demand comes back into those levels for stock prices. So I think if you look at a straight 20 to 25% correction from those 1900 odd levels, it comes closer to 1500 and 1450 kind of a zone. It also coincides with the 200-day moving average. So what I'm trying to indicate is that 1500 to 1450 zone could be a very good support zone for the stock price. It's nearing that support level at 1560 approximately. So I think you can start buying at current levels, and closer to 1500 and 1450 zone is where I believe you should probably try and complete your entire quantity which you're looking to buy Balkrishna Industries.
Okay, so that's really interesting, Kunal. One can enter now, but in the near term, you might just get a nice dip and then you could average lower. Vijay, what about you? Fundamentally, how's Balkrishna looking? And would you also, like Kunal, wait for a bit of a correction to really load up, or would you start buying now?
Well, if you look at the overall picture fundamentally, Balakrishna's business is not based out of India. So most of it sells into Western countries, and especially United States, where it does large tires, and these are for tractors and earth movers and stuff like that. So I think that this correction which is going on, probably it can pull the stock down even to maybe 1400 odd levels. There have been certain downgrades by certain brokers on the counter, but it doesn't make the company bad. I would say that these corrections are good entry points. But if at all you're getting a better option in the tire space, I think that Apollo Tires is much better placed, much better company with a much broader base in India and abroad. And it is from the same industry. So I would say that if all you want to get into a tire stock, get into Apollo Tires. The valuations are also very good, and we expect that whether we have fossil fuel cars or EVs, in both cases they would require tires. So Apollo Tires is also a very well established brand. So I would recommend a buy on Apollo Tires rather than being in Balkrishna. Although Balkrishna is not a bad company at all, but again, the product offering of Balkrishna is much smaller, and it is skewed towards international markets, and in India the usage is very less. So I would recommend a buy on Apollo Tires rather than Balkrishna.
So nothing wrong with Balkrishna Industries, so to speak, but of course in India you have some leading tire companies like Apollo and even the other blue chip names, MRF. So Vijay sees a flight to quality maybe as a better, more prudent decision here, but nonetheless it's a good stock if you are looking to participate. Good international presence as well. Let's move forward. The next query is from the same viewer, Adi Narayan, and he's this time bought shares of Engineer India, and he's bought, in fact, at a price of 110 rupees. He's bought 700 shares. He'd like to know if he should stay invested or exit. Kunal, on the chart, any cues that you might give Aditya Narayan, sorry?
So, I think out of the PSU names, there are very few PSU stocks which have not, performed very well. And in fact, it's not just about price performance. There has to be an inherent volume built up when you look at the charts. Now, when you look at the charts, for example, names like ONGC, Coal India, GAIL, etc., the ones which have shown signs of promise earlier, and the ones which have now delivered on the back of the promise, you've seen an inherently strong volume built up. Now, apparently for Engineers India, there has been, a very, I would say, very low kind of a volume built up. It's not been one of the few encouraging stocks in terms of price performance as well historically, and the volume built up has also been a bit lower for Engineers India. So look at the comparative volumes for last 6 months for Engineers India as compared to historically over the last 2-3 years. So the last 2-3 years when the stock was at 200 levels, the volumes were actually much higher than what it is at current levels of 70-75, and which is why the stock is not performing. So I would advise a switch from Engineers India. Even at current levels, I think much better stocks on the PSU basket could probably give you much higher returns, and there is more strong price trends as well in many of these stocks. So some of the names like SBI, which we've been indicating time and again, they look extremely strong and durable in terms of price pattern breakouts. So I think that looks attractive. Other ones like GAIL, NMDC is one of the stocks which is inching towards a big breakout. NTPC, Power Grid, I think these are the few of the names which you can look at. So I would advise a switch from Engineers India to any of these names. from the PSU pack.
All right, that is the call coming in from Kunal on Engineers India, saying that he would recommend a switch from Engineers India to better stocks in the PSU basket. And some of the names that he's mentioned is SBI, GAIL, NMDC, NTPC, Power Grid. Vijay, what's your take on Engineers India? A lot of news flow coming in for that particular counter. Our viewer has bought about 700 shares of Engineers India at 110 rupees per share. What should he do? Should he hold or average it?
Well, I think that it's a great company, great PSU company with a lot of work. But again, there are certain inefficiencies always which exist with PSUs, and Engineers India is also one of them. Again, I'm saying it's a great company. And if somebody has patience, he can keep on holding it. But again, if you ask me in this kind of a momentum, if there are opportunities elsewhere, definitely they are. So I would recommend that he can probably switch to either a company like Dredging Corporation, which is again a PSU company, and it's a takeover target, and probably it is going to be disinvested. So Dredging Corporation has seen a huge correction in the last few years, and it looks very ripe to go up, and this guy can definitely make up the losses which he has done in EIL. So Dredging would be my call. So shift to Dredging, or you want to wait if you have a lot of patience, keep on sticking to Engineers. I'm sure that you can get your price, but it would take time. But if at all you want to use this, you want to ride the tide, you want to use this momentum in the market, so Dredging Corporation would be my call. And my friend Kunal has mentioned a lot of stocks which are very good, but I think that there is a lot of steam in Dredging left. It has just started.
All right, so that is the call coming in from Vijay on Engineers India, and he's saying that Dredging Corp also looks very good. All right, let's move on with the next viewer query then, and this is coming in from Lakshman S, and he is saying that please suggest 2 to 3 long-term bets in manufacturing or artificial intelligence, and what should be one's strategy for investment. Vijay, I'll come first to you on this. So which stocks rather look good on a long-term basis in the manufacturing and artificial intelligence segment? Also, what should be the strategy for investing in such segments?
Definitely, if at all we have to invest, in any long-term investor has to look at the future 10 years down the line, whether the company has products or a vision to have products for the future. And artificial intelligence is something which is going to be is already a part of our lives, so to say, and it's going to be increasingly used in the entire tech space. So I think that companies like TechM, which have a very good lineage, very good management. So Tech Mahindra is very good. Companies like eClerx, Birlasoft, these are good. In the manufacturing space, I would recommend a few companies. Mahindra CIE looks very good. I think that this company can do well. Minda Corporation is again a very good company. The entire Minda group looks very good. Motherson Sumi can go up to 300, 350, and it can regain its lost glory. So and it is also doing a lot of work in the tech areas, which probably this news will come out in the coming years. So these are few companies I'm looking at with a futuristic point of view, and I think that these companies can do well. So it could be a manufacturing plus an IT kind of a setup. Look at what has happened with Tata Elxsi. We have seen this stock has just skyrocketed in the last 6-7 months. So these are great companies which I've mentioned, and one can have it in their portfolios.
Jay, very interesting list from you. Kunal, what about you? What comes to mind when you think about artificial intelligence?
Quite a few companies, frankly, Varun. And I think when you look at the entire sector, so the investor has or the viewer has asked for a couple of key sectors, but then there are a lot of stocks to really choose upon, and it's very, very difficult to try and pick and choose an exact theme or exact set of stocks from the themes which you mentioned. So few of the names which I'll probably echo from what Vijay also discussed about. I think Tata Elxsi has done exceptionally well. The stock has gone to almost 4x or more than that, I think, in the last 8-9 months. It looks extremely charged up. In fact, many of the IT stocks overall as well, ITES, I think have been looking extremely strong. And I think many of these stocks, they stand potential for gaining much more higher, even from current levels. The only catch over here is that, if it's a theme related, it has to be more long-term oriented. So you need to have a time horizon of at least 3 to 5 years plus into these kind of names, because when you have seen such kind of an exponential return, in a span of time over the last 8-9 months, it's possible that these stocks may take a bit of a pause, go through their routine corrections, and then come back again on a longer term basis. So if that's the kind of a play which you're looking out for, then I would also echo with many of these names. Motherson Sumi has been one of the few stocks which has charged up just pre and post result in the last couple of weeks, and that also looks very attractive. So quite a few names to choose upon. Tata Elxsi, Motherson Sumi are the ones which you can look at from current levels as well.
Okay. On that note, a big thank you to both our experts for joining in and sharing their perspective with our viewers. It's time for a very quick break on Buy Now, Sell Now. Stay tuned. We'll be back shortly.
Welcome back. You're watching Buy Now, Sell Now on ET Now. And yes, because of work from home, because of lockdown, you saw a lot of people get into markets, a lot of retail investor participation. Also, you had a lot of them actually enter the market for the first time and not knowing what to do. But here, we've got a home manager come equity investor, that's Nisha Mutta. My colleague Karunya caught up with her and tried to understand what actually helped the DIY trader tide the volatility in the markets and during the pandemic, and also she's sharing with you some of the top buys that she has in her portfolio. Listen in.
My family already invests in share market, so even I got inspired by them and I started that.
So tell us about the initial months of lockdown. There was so much market volatility. A lot of people were selling. There was a severe market correction also that happened. At that point of time, did you see it as an opportunity to invest, or were you also staying away for some time to see how market plays out?
That was actually an opportunity to invest because people were selling in huge quantities, and so the share prices got reduced and we got a huge volume at less cost during that time. So
okay, but you were not scared of taking the risk.
If you will accept the risk, then returns will upfold beyond limits.
Wow.
If you don't take risk, then there will be no returns.
Clearly, you were coming from some experience. So tell us how the last 1 year has helped you shape into an investor that you are today. Because before that, I mean, it's an event that nobody had ever seen before. A lockdown across the country. There was so much happening. And so much negative news flow about the virus. So if you could tell us what really encouraged you, what really kept you interested in markets, and if there are any interesting stocks that you bought which have really performed well for your portfolio.
Interesting stocks, I would like to talk about IOLCP. I was going through what to invest. I just was finding out any stocks. Then I came across IOLCP. That time its PE ratio was, I guess, 3. And its debt was reduced by management, and it reflected good opportunity.
Okay.
And it was at 700 or 750, I sold IOLCP. That was my biggest multi-bagger till date.
And this was during the lockdown, was it?
It was last year, yeah.
Okay. And in the recent past, any other bets that you have had in the market, any other stocks that have sort of the experiences of which you would like to share with us?
Due to recommendation on ET Now of Kunal Botra, I invested in Motherson Sumi system.
Okay.
That will bring a huge profit, I guess, in future.
Has it already started to show good results?
Yeah. Yes.
Okay, I'm glad ET Now has been able to help you. But Nisha, you are a CA and you know how to read balance sheets and you know how to understand company fundamentals and what is it that the management is doing. for other homemakers like yourself who may or may not be as qualified, what will be your biggest experience or your learning that you would like to tell them, or a tip that you would like to tell them how to start investing in markets?
I think when you start investing, then you will learn about market. Without investing, you can't learn. See, there is a quote that if you want to learn swimming, then jump into the water. On dry land, no frame of mind can teach you to swim. So investment is similar. If you want to learn investment about stock market, then you have to invest and then you can learn.
What has been your primary forte or way of participating in the markets? Are you more of a trader or are you more of an investor who
I'm an
is in
investor.
it? Okay, all right. Okay, if because you're a stay-at-home mom, I would like to throw this question at you. Is there any similarity between managing your money, your portfolio, and managing a home? Have you ever seen a sort of similarity or any experiences that you sort of use either way, this way or that?
No, both are very different. In market, we have to take risk. At home, there's no such thing. We can do it on our own.
So are you also investing for the long haul to plan your child's future as well? Do you have anything in mind or any personal goals, if not for your kid, but for yourself, if you have any goals?
Yeah, we have already started investing for my daughter also.
Okay.
Yeah, long term.
Great, that's great. And what is going to be the way forward? Will you, go on with this approach, or do you want to equip yourself? Are you doing any courses, books, or do you want to upskill in this field?
No. I don't think that any book or any classroom will teach you about stock market. Your experience will teach.
All right. Well, that was an excerpt of Karanya catching up with, viewers who haven't been into trading their whole lives, but they've recently picked it up as a passion, and of course, they've done quite well at it. And it's just so good to hear so many experiences like this, and it's really amazing the retail participation that's picked up in our equity markets. But we're now going across to my colleague Ruchi Bhatia, who's joining in with an exclusive update. Hi, Ruchi. Thanks for joining in. What are you tracking today?
Well, just 2 days ago, we had told our viewers that in the GAIL tax dispute case, the government of India, remember, had lost out at the International Arbitration Court. We're given to understand that the Indian government is likely to now appeal. In fact, the appeal will be filed in very, very soon. This is coming in just a day after GAIL CEO Simon Thompson also met Finance Secretary Ajay Bhushan Pandey to chalk a way forward as far as the tax dispute case is concerned. Remember, GAIL in fact had reached out to several courts, whether it is US, UK or Netherlands, to press for the arbitration award to ensure that the Indian government pays the arbitration award. But now we're given to understand that India is now going to strongly contest against all the other suits that have been filed by GAIL Energy at various other international courts as well. This is the second high-profile tax dispute case, remember, which the government of India had lost after Vodafone, but now are looking to appeal. After the Permanent Court of Justice had given its arbitral award of $1.2 billion, they had given a time period of 90 days to appeal, and we're given to understand that an appeal by the Indian government will be filed very soon. This even as for the second day, we're seeing GAIL Energy CEO Simon Thompson holding another meeting with top finance ministry officials today. In fact, we're given to understand that the Indian government has given an option to GAIL for a resolution process under the Vivad Se Vishwas scheme as well. However, any dispute resolution, as we've been telling our viewers, will happen only under the ambit of the existing Indian laws. The Indian government is, of course, going to challenge
and appeal against the arbitral award on the basis of the fact that the International Arbitration Court cannot have a verdict and cannot put an order that questions the sovereign right to taxation. As far as India is concerned, the Indian government believes that GAIL had conducted transactions via various tax havens to evade taxes in the country, and which is why they will be proceeding with these cases, not just an appeal against the arbitral award, but also several other suits that have been filed by GAIL Energy, whether it is in US, UK or
Discussions are ongoing, like I said yesterday, so we'll see how we get on. Discussions are ongoing, so we'll see how the discussions go. Thank you.
Welcome back. You're watching Buy Now, Sell Now on ET Now. And remember, earlier in the week, you have Prime Minister Narendra Modi say that the India is committed to bringing natural gas under the GST regime. So taking that particular point forward, we spoke to Satpal Garg, who's a member of PNGRB, and A.K. Jana, who's the MD at Indraprastha Gas, and discussed on the likelihood of natural gas getting included in the GST. And what does this actually mean for the entire sector? Listen in.
Bringing natural gas under GST is the biggest news, and that too coming from the Honorable Prime Minister himself. And so it will be a game changer for the entire gas industry. So be it natural gas pipeline companies or the natural gas trading companies or CGD sector, and even the gas consumers. So for everyone, it will be a game changer. So that is the, I think, biggest factor. And why I'm saying so, there is a reason behind this. So not only that natural gas is environment friendly, it is cheaper in comparison to liquid fuels. So in terms of CO2 emission, say every increase of 1 MMSD gas usage, it will result in reduction in CO2 emission by 0.
Okay, on that note, completely out of time here on Buy Now, Sell Now. Thanks so much for watching. Have a great weekend and stay tuned to ET Now.